Hello everyone, hello, and welcome back to my channel. And it's been some time since I last posted. It's been quite a while since I last posted anything. So I'm glad to be back again. I've been extremely busy, been caught up in so many things. So I haven't been able to post regularly. Well, welcome back to my channel. Now today we're gonna have a short session. So we're basically back testing. Even though I'm live, as you can see, I'm actually back testing this strategy. One trader. Also, he also trades binary options. BLW, that's the name of his channel. And he also have a signal group on Telegram. And this is not the first time I'm back testing this strategy. And the first time I did, I lost a lot of money. But this time, so I'm basically being a bit more patient with getting familiar with this strategy. So we're gonna get into the nitty-gritty, explaining what kind of setups you need to wait for and how himself uses it and what I added to it, because whenever you're using another trader's strategy, you don't have to do the exact same things that they do. Remember, you can actually add your own thing. So that's basically what I did, but I'll explain everything in details for you guys to understand how he uses his strategy and how the modifications I made and how I'm going to use it myself. Yeah, as you can see, we are using OTC because it's now 11:41 p.m. Eastern Standard Time. So the market is closed. London session is closed. New York session is closed. I believe the only session that's currently open is the Tokyo session, in which most traders do not trade because there's not that much volatility in the Tokyo sessions. You don't have price doesn't move that much. You don't have good price movement. Well, I'm using, as you guys already know, is packet option. This is a binary option broker. A packet option with this strategy. This strategy comprises of three main indicators. You have, see the green line, that's the SMA, 50 SMA. That tells you what market tendency is. If you're in a trending market, if you're in a ranging market. Remember, you have only two types of market. Either a trending market, meaning you have a downtrend or an uptrend. That's when you have lower low, lower high, high low, high high. Or you have a ranging market, meaning that a market that's not neither in an uptrend or a downtrend. It's just moving sideways. It's in a range. You don't have any the uptrend or downtrend. Right. So the 50 SMA actually helps you identify the market tendency. It tells you when you're in an uptrend, like here, you'll see it's below the price. Now you're definitely in an uptrend. Or if you're in a downtrend, then it would be above the price. Okay, let's add a couple more. Yes. Okay. look for an uptrend. We already had an uptrend example. I'm gonna be looking for an example for a downtrend. Now you see the 50 SMA, it's above the price. So now you're in a clear downtrend. You have the moving average above the price, you're in a downtrend. If it's below the price, you're in an uptrend. Now the two other indicators that we have is the RSI and then the stochastic oscillator, both default settings. Now let's look at the RSI first. Explain how you guys should be using the RSI. Now the RSI, as you can see, you have the main line. This line is basically moving with the price. This is just price action right here. Look, our price is moving, it's actually moving the same way. So that's the price right here. Now you have the upper level, the 80 level, and you have the middle level, which is the 50 level, and then you have the level at the very bottom, which is the 20 level. Now these settings, you can change them yourself and put them to whatever you like. Bucket option, see over here, you just have to go over here, you change that to whatever you want. And sometimes we have traders that will change his upper line to 70 and then the line at the bottom to 30. Now it all depends, that's your preference, and you can actually just do the settings as you wish. Now you have the stochastic. The stochastic is basically like two moving averages, two simple moving averages. Stochastic, period of V, okay? And also you have these two levels, the 80 level at the top and then the 20 level at the bottom. Okay, you can change the color of the level as you wish. Now here I have the 80 level light blue, and then the level at the bottom yellow. Alright, now let's look at how you use them. Most traders, they use both the RSI and the stochastic as follows. Most traders, for example the stochastic, they would wait until you see these two lines reach the upper level, and then they go ahead and go short, they sell. And the opposite, when you reach the bottom level, they would go ahead and buy. So most traders use it. Well, the stochastic actually does what? The stochastic tells you how strong price is moving. Now if you are in a downtrend, as in here, then you will see that if it's a very strong downtrend, you see how price is extremely far or close to the 90 EMA and extremely far from the 50 SMA. That tells you that the trend is really strong. Whenever you see this, you see how far apart the moving averages are, and you see how close it's like price is hugging the 50 SMA. That tells you that the downtrend is really strong. You're in a very strong downtrend or trend, depending on the trend you are. But here we are in a downtrend. Now, if you had another indicator that would tell you how strong the trend is the Bollinger Band. Now, if you go ahead and add that indicator to the chart, you would notice that over here the price would be on the outer side of the band, the outside of the band, the Bollinger Band. That tells you how strong as well the training is. When you have price ranging outside of the band, it's the same as you see over here, right? Now, if you look at let's look at a different chart. Now we're looking at this pair USD OTC. You see how price is moving? Look at the moving averages. Everything is just moving all together, merge. So that tells you that you're neither in a downtrend or an uptrend. Price is moving sideways. So whenever you have a market like this, you're doing a trading. Possibility of losing is really high because price is not moving in a clear direction. You don't have higher low, higher high, lower low, lower high. You don't have a trend. You don't. So you don't have a clear confirmation as to what price is doing. You know what price is doing. It's moving, it's in a range, but you don't really know what price is going. It's like the predictability is really low. It's extremely difficult to predict where price is going. Remember that trading is probability. Yeah, probability. But it's a risk. But at the same time, you should take calculated risk. If you're in a ranging market, that tells you that you need to stay away. You're not supposed to be trading in a ranging market because you're not in a clear uptrend or downtrend. Buyers and sellers, they don't have momentum. But neither one has momentum. So you need to stay away from this market. Right? Now let's look at a different market. We can clearly see what price is doing. Now, look over here, for example, you're in a clear downtrend. You're in a clear downtrend. And also, when you're in a trend, when you look at the RSI, depending on the behavior, then it will tell you also whether you're in a trend or not. Look at this. Look at the RSI. The RSI is below the 50 level. It's basically close to the level at the bottom than it is to the one at the top. What that tells you is price is still in a downtrend. Price is ranging down. And also look at the stochastic indicator. You see what the moving averages are? They're right below the 20 level. What that tells you is also look at how close to each other they're moving. Very close to each other. But that also tells you that you're in a downtrend. Now, when you have a market like this that gives you a clear tendency telling you exactly where price is going, and your best bet in those conditions is you need to follow the trend. You trade in the direction of the trend. That's probability for you to win is extremely high. So when you do not go against the trend, you do not trade in a direction that's opposite to the trend. But that's not enough for you to just go ahead and take a trade. It's not enough. Why? That's where the discipline comes. The discipline comes by testing and everything. That will tell you exactly what kind of confirmation that you need to wait for and what kind of setup you have. That's why it's important for you to journal. The more you backtest, like the more you know what you're supposed to do and what you're not supposed to do, when you're supposed to take a trade and when you're not supposed to take a trade. You develop a pattern that's giving you an edge. And the edge is it's in the practice. It's in the practice, it's in the consistency. It's also in being disciplined enough for you to take trade that you're supposed to take and stay away from trade that you're not supposed to take. Because if you can't see your setup, clearly see your setup, you don't have all your confirmations lined up, then if you take a trade, the probability for you to be gambling is really high. That's definitely what you will be doing. You just be gambling as opposed to trading, professionally speaking. And you most likely would lose money as opposed to becoming profitable more and more day by day. And I'm not saying that everything will be perfect. That doesn't exist. But you need to put all the probabilities on your side, all the odds on your side.